Quick update on the Aussie versus the Japanese yen, which is our dominant currency sentiment theme for today. We have seen the pair move down further into this overall support structure that we have highlighted on the chart. We have seen quite a big reaction to the downside in the equity markets following the retail sales report from the US. We did expect downside if we got a substantial miss in the pair. Now, we did see the report coming in slightly below expectations, but nothing really too far outside the range of expectations, which is quite surprising to see the big reaction we're seeing to the downside in risk assets. But it does look like the markets are just waiting for that event to move that event out of the way to follow on with that strong risk off turn that we've seen from the start of today's session. Looking at the pair, since we didn't get a substantial miss to the downside, we won't really be interested in selling this right at the session low, especially inside this overall support structure. We would still consider a pullback as the highest probability opportunity to re-engage this pair to the downside. If we do see a pullback, we can target this overall same support structure coming in at that 67.50 and 68 psychological level as the good spot to reduce some risk and bank some pips on this move to the downside. Also, biggest risk factor now with retail sales out of the way would be a drastic change in the risk tone. If we see the risk tone tilt more negative in today's session, that'll be a tilt more positive in today's session. That'll be a good sign to liquidate this position and invalidate this trade idea to the downside. Just a quick update on the Aussie yen. If there's any questions, please don't hesitate to let us know.